Hi there, welcome to Kneppy Invest. May the 4th be with you. Interesting story for those who have no idea. May the 4th be with you comes from a 1979 political ad featuring Margaret Thatcher. If I remember correctly, it said, "May the 4th be with you, Maggie," or "Congratulations, Maggie," in response to something that happened to Margaret Thatcher in 1979, which was 45 years ago, which means Star Wars is 47 years old. Wow, I that just makes me feel really old that Star Wars is 47 years old. And today is May the 4th, 2024. Now, this is a third consecutive answer reply videos that I have recorded after a night shift. Yeah, that's 3 Friday nights in a row that I have worked. 2 of those shifts because of a swap. Someone wanted to have the Friday night off, and I obliged and agreed to do a swap with them. And to be honest with you, they did 2 of my day shifts. I did their night shifts, and I prefer working nights. I also prefer 12-hour shifts over 8-hour shifts or day work. I'm not wired to handle working Monday to Friday, 5 days a week, 9 to 5. I absolutely hate that. And I am actually quite capable of working night shifts. Not all the time, not many night shifts in a row because I don't get much sleep during my night shift sequences. So we only do 2 night shifts in a row, and I get about 4 hours sleep from when I wake up the morning before my first night shift to the evening after my second night shift. So that's 2.5 days of 4 hours sleep, but I can handle that. For some reason, I can easily handle that. So if I do seem a little bit fatigued or tired, if I do some weird things, that's the reason why, because I am right now functioning on about 4 hours sleep in the last 2 days. But I seem fine. I feel fine. And all I need is a 1 hour nap. That's all I need. So I get that 4 hours sleep I usually get is across 3 different sleeps. So 2 1 hour naps and then a 2 hour sleep in between my 2 night shifts. Anyway, so my last 2 answer reply videos were about an hour and a half long, and I'm going to try to keep this to under an hour. So I've started recording this video at about 10:53 a.m. on May the 4th, 2024. And I do know sometimes I do tend to ramble on a little bit and rant a little bit as well. So I'm going to try to keep or limit that. And also, I'm only going to really focus on those particular comments that either asking a question or have something to say. For instance, the first comment, and if you do want to ask me a question, leave that question in the comment section of this video or in any other video I record in the next week. Or if you have something really interesting to say, have a suggestion of a company, I love your suggestions. Share ideas with me. In fact, one of the ideas that has been shared or given to me, I have taken a position in that company. That is Mayfield Group. And I think someone shared that company with me last week or maybe the week before. I took a quick look at that company during the video. It piqued my interest. Then I took a closer look and it piqued my interest even more. And then I took a position. So this works both ways. I share ideas with you. You share ideas with me. So if you do have a company you'd like me to look at, put that company into the comment section of this video or any other video. Now, I mentioned I'm going to focus on those comments that are either questions or you have something to say, or the questioner or the commenter has something to say. For instance, Animal Spirit just wrote here, "Thanks, Kneppy." So I'm not going to linger on these type of comments. So let's go to, and thank you, Wally4350. Promo SM is a common spam comment. Kneppy, no idea. So that doesn't mean I should delete anytime someone writes promo SM. I don't know how that works, but I will delete those comments. Okay, so the first legitimate question we have, not even legitimate, the first question we actually do have is from Josh K519. This is in regards to Bigtincan and Bravura. Thinking of Bigtincan being undervalued based on guidance and current markup, what made you stick with Bravura through the long dip compared with Bigtincan? Assume decided to get rid of it. Cheers, Josh. So at this point in time, I own Bravura, but I don't own Bigtincan. But I've only held Bravura for about 6 months. I did or was a shareholder of both these companies back just after they listed on the ASX. For about 2 years, I held both of these companies, and then I sold out of both companies for different reasons. I think Bravura because they released a fairly negative outlook or something, and Bigtincan just because the share price was in a downtrend, and I thought the share price would just go further down, and it has. And I think that was just after they knocked back a takeover bid, and then they did a capital raising at a massive discount. That's when I got rid of the shares, and the share price has pulled back a significant amount. And I'm interested in Bigtincan right now. Even though I don't own the company, I'm interested, but there's so much negative sentiment around the company that I think that will keep a lid on the share price for a while. Now, I think Bigtincan is on the precipice of reaching that very important inflection point of being sustainable. And what I mean by being sustainable is they generate enough cash flow in their business that they can grow through allocating that cash to growth initiatives. And I think Bigtincan is at that point where they will be self-sufficient without going back to the market for capital. Now, one of the problems I did have with Bigtincan is way too many acquisitions. And I do prefer buying companies that grow organically, not through acquisitions. But in saying that, I think Bigtincan right now is the most attractive it has been since it listed on the ASX. It's just the negative sentiment in this company has driven the market cap and the valuation of the company down to almost attractive levels. But again, if we do have a look at the chart, and let's have a look at the chart for both of these companies. Now, Bravura, on the other hand, is just, when I bought shares in that company 6 months ago, I'll show you when I bought, it was just driven by the chart. So let's have a look at the charts for both of these companies. This is another reason why these videos go long, is because I just like having a look at charts. So this is Bigtincan's chart, and yeah, it's negative sentiment. Share price is still in the long-term downtrend. There's no end in sight to this downtrend. Now, there is a possibility the bottom has been reached and we are in a consolidation period. Now, the consolidation period started in November last year, so it's not that long. I'd like to see a consolidation period go for a little bit longer, and whenever the company releases what I think is a positive announcement, the share price rallies for a little bit and then the share price pulls back. We've seen that about 3 or 4 times in the past 5 months, and that's just telling me there's still a lot of resistance. And when I say resistance, I'm just talking about all these shareholders who have bought in the past at much higher levels want to get out. They think this company is a dog stock, and probably understandably so, because the share price has fallen a fair bit. Share price has fallen from a high of about $1.50. I thought it was maybe higher than that. Yeah, it was higher than that. Just above $1.50 back in 2020, all the way down to 16 cents. And just by looking at this chart, it's negative. There's no reason in my mind, even though I think this company is attractively valued right now, to even think about taking a position just yet. I just want to wait for some sort of signal. The sort of signal I did find with Bravura not that long ago. So let's have a look at Bravura, and you'll be able to see the difference in these charts, and a big difference, in fact. Okay, so I bought Bravura just like Bigtincan many years ago, and in fact, Bravura, you can see this beautiful uptrend. The share price of Bravura back from 2017 all the way through to about 2019-20. So I was a shareholder during this period. I can't remember when I got out, but I might have been trading this company once or twice as it was falling, but my trades never lasted too long. Now, my most recent 2 trades, I bought at 52 cents. That was not really the end of the downtrend. This was a sort of a low confidence trade based more on the short term. And then when the company released a positive announcement in August, that would have been results, share price rallied on that day by, 44%. I sold on that day for a nice profit. Then the share price went sideways, which is a good sign. And then I bought back in at 80 cents back in December. Now, fun enough, in my superhero account, it says I've owned shares in Bravura for 170 days or 6 months. Does that make sense? 6 months, October. Doesn't make sense. Pretty sure it says about 180 days. So maybe I got the date wrong. Maybe it was back here I bought. I forget. Anyway, I bought at 80 cents, and the share price now is $1.37. And the share price is an uptrend, a nice little consolidation period. So what's happening now with Bravura reminds me of what happened back in or between September and about November, December of last year. The share price was going sideways. That's what's happening now. Share price just going sideways, and maybe you'll go sideways for a month, 2 months, 5 months, 6 months, 5 years, or maybe 2 more days, and then maybe the company will release a profit upgrade, and the share price will go off again. So I have no reason to take profits in Bravura just yet, because I haven't seen any weakness in the share price. So just by comparing both charts from Bravura and Bigtincan, you can see a big difference, and that's why I'm trading Bravura right now, but not Bigtincan. Okay, so that answer to your question went way longer than I thought it was going to go, but thank you. Okay, could you do a video about SXG? Okay, so this is not asking about SXG, whether I can do a video on SXG. I have a bit of paper where I put all your suggestions on it, and I have no idea where that went. I can use this one, SXG. This is a company I absolutely know nothing about, apart from what you said right here, where you said it's a gold carbonate. So let's have a look at SXG, Southern Cross Gold. Okay, Southern Cross Gold has a market cap of, according to ComSec, 208.7 million. So it's not a small company, and I'm assuming it's exploration, and we can tell if it's exploration just by looking at. They don't have a quarterly report here. There's an investor presentation, 2 investor presentations. Southern Cross drills 34.1 grams of, 34.1 grams per ton of gold over 3.6 meters. Okay. So, they released their Appendix 5B in March. So that means next June. That's a weird reporting monthly. Anyway, so the main thing when you open up an Appendix 5B is just look at the cash flow. And if I see no cash flow in any company like this, I just move on. How many pages is your quarter report going to be? 128 pages before I get to the Appendix 5B. So no receipts for customers. So this is an exploring company. Okay, so next thing I'm going to look at is just the chart. And this is a story stock, and typically I am not that enticed by story stocks anymore. I used to love story stocks, but not anymore. My investing style has changed over the past few years. Now, in saying that, just by looking at this particular chart, it looks great. A beautiful trend for Southern Cross Gold. And the trend is in no doubt right now. The one thing I'd like to see is probably a little bit more volume. I'd like to see a volume expanding as the share price goes up. It hasn't really done that. So that's probably one little negative I can find. You can see the breakout, beautiful breakout of this company's chart on the 5th of September 2023. Share price on that day rose 52%. Share price then went sideways for about a month, maybe even over a month. That's usually a good sign. See that share price just goes sideways for a month, hits the shorter term moving average channel, and then starts going up higher. And I've seen this a lot. When the share price goes up heaps in one day, share price then goes sideways, and as soon as the share price gets towards or very close to the short-term moving average channel, it then starts going up. That's a pattern I've seen over and over again. Sometimes you do have to be patient. In this case, they released this announcement, I'm assuming it's an announcement, on the 5th of September, and then the share price really started going up probably a month and a half to 2 months later. So that's Southern Cross Gold. Other than that, I'm not sure if I will do a video on it just because it is an exploration company and it's a mining company as well. But thanks you for the recommendation. G Kuku. You've all got very interesting names. Okay. Okay, so Liam Jones says, I believe Woodside is more reflective of gas than oil. That just shows me, or should show you, how little I know about Woodside. I don't pay much attention to this company. The most recent drop was due to a winning shareholders vote against the climate action plan. Actually, I have heard about this. This has been in the news, which is really weird. Why any people talking about or wanting companies to change their climate action plan would invest in Woodside. I just don't understand that unless they want to destroy the company. I have no idea why anyone of that sort of mindset would be investing in Woodside, that type of company. Sounds like shareholders of Woodside are split in half between supporting hydrogen or gas and oil, and with the green energy transition hitting a stalemate, the clean energy shareholders are selling off. Okay, that makes sort of sense. Thank you, Liam Jones. Let's have a quick look at Woodside. Yeah, I remember not understanding why the chart looks so ugly. Nice bounce, a beautiful bounce off the. Actually, that's a while ago. Okay, so yeah, share price has fallen below $29, which was a support level. This chart looks absolutely ugly, and so what Liam Jones is saying sort of makes sense. I don't understand why the share price will be dropping like this when oil is rising. But does Liam say it's more oil, more gas? Yeah, more gas. But I do have gas somewhere here. Let's have a look at market, and I do have natural gas somewhere here. I think it's this one, QGI. This is E-mini natural gas futures, and doesn't look that exciting. So maybe Liam Jones is absolutely right. Thank you. That's the sort of comment I like. So it's not a question, it's just a comment. And I learn a little bit from some of these comments. Great video, mate. Great call taken with IPD. Oh, that's the IPD group. Yep. Thank you. Oh, Spirit again. Okay, so a question from AU in regards to Resmed. Are you guys taking profit on Resmed or holding long term? TMR should see $33 open at least. I think now, just not sure to exit or hold it long term. Technical looks good, but valuation wise looks fairly priced now. Okay, so I did take a fairly big holding in Resmed when the share price dropped a fair bit. And my intention was to trade out of half of that once the share price had rallied a fair bit, but I'm still holding on. The main reason I'm still holding on is because of what happened when they released their quarterly results. Share price rose 29th of April. Your comment was released about then. Yeah, so I won't take profit just yet with a chart like this. The chart looks pretty good. So I forget exactly when I bought. I should probably write down or note on the charts when I bought. But I bought somewhere in here when the share price fell down to ridiculous levels because of this overreaction from the market. And it just shows you that sometimes the market does overreact, and it's wise to follow companies like this and absolutely have a plan when the market overreacts, like it did with Resmed. Some people might have bought, fairly early on, and it also pays to be patient. Anyway, the chart looks pretty good now, but the share price is getting back up to where it was before this Ozempic panic at about $33. I could take profits. What you could do is not sell your whole holding, just take half profits, sell half of your holding, and then just run the other half. You could do that. And that was my original plan, but I haven't done that just yet. Something I will be thinking of doing. If I see a little bit of weakness in the share price, I might do that, but not right now. So thank you. Thank you, AU. But valuation-wise, looks fairly priced now. I haven't really looked at the valuation, to be honest with you. It's hard to do a valuation, but just based off market or trading view, P ratio of 33, this company has been growing at a consistent level. So if you look at the annual growth in revenue, it's every year, revenue just keeps on grinding up. The only concern I had was decreasing margins, but margins may have turned a corner as well. So P ratio about 33, according to TradingView, may not be that high. And the other thing you should do, which I might do right now. Yes, let's do it right now. Not FinViz. What's it called? FinChat. What I really like to do is just compare the P ratio now to historical levels for the company, or maybe not P ratio, maybe other sort of valuation metrics. For instance, they should have quite a few metrics here. They should have, say, they have a P ratio, price of sales, price operating cash flow, price of free cash flow. My favorite is enterprise value to free cash flow, but yes, they do have that. In fact, they've got most of them here. Free cash flow yield apparently is a fairly a significant, or not a significant signal, is a fairly strong signal to whether a company is going to outperform the market. And so what I like to do is just look at some of these metrics. For instance, P ratio, and then I'll put EV to free cash flow as well, just to see what it is now compared to the future or the past. Why is it not showing? There we go. So this is EV to free cash flow. Right now, it's between 20 and 30. And historically, that's about average. Now, we did see the EV to free cash flow of this company significantly higher during 2022 and 2023. But generally, if you go back to 2016, it was around about 20 or so. And now it's just above 20, in the mid-20s. So fair value compared to about 10 years ago. And then the company went through a bit of multiple expansion from about 2016 through to 2022. And then share price pulled back, and now fair value to what we saw 8 years ago. But maybe this company will go through another period of multiple expansion. Now, have a look at also P ratio. So this is P. This doesn't look like the P ratio to me. It says it's 3. Price and P ratio is not 3. What drugs are you on, FinChat? Okay, so we'll ignore the P ratio because that's absolutely ridiculous. Yeah, it says P ratio is 3.32. It's not. It's absolutely not 3.32. Anyway, so would I consider Resmed fairly valued right now? Probably, yeah. Yeah, I'd say it's fairly valued. It's not cheap. It's not expensive. And do whatever you want with it. But I just like the chart. The chart looks actually pretty good. And the company did release a really good result. And that's why the share price has taken off. And usually, if a company does release some really good financial numbers, there is a possibility the share price might run for at least 6 months. Just a possibility. Doesn't always, just a possibility. So there might be more in the Resmed juice, in the juice bar, the Resmed train, the Resmed high-speed train, whatever you want to call it. And I can already see that this video would not be going under 1 hour. Okay, Stuart Percival. The recent attack on Woolworths is under the veil of helping the average person. It's just a dog and pony show for votes. It's just a populist move. I absolutely agree with that. I think this attack against Woolworths is just plain stupid. It doesn't make sense. It's not going to do anything. I think it's just politicians thinking that's what the public want. And I think it's also politicians thinking, well, if we do that, the people will love us because we have our heart, we have our pulse on the heart of the people, or something ridiculous like that. They don't care at all about this, because if they really cared, they'd be going after the real reasons people are feeling pressures, living pressures right now. Stuart Percival says log chart, question mark. Yes, log chart, for those who don't know. So if I'm looking at long term, I look at log charts, and the best reason behind that and the best way to showcase why you should look at log charts if you're looking at the long term, maybe not necessarily the short, medium term, is just by looking at the Dow Jones. Could even do it with the NASDAQ, huh? Let's do it with the NASDAQ. So let's have a look at the monthly chart. So this is non-log. So it's just ridiculous. It's just, you don't see, and it makes sense because you just take normal increases. To double from 1 to 2 is the same as doubling from 100 to 200. But you don't really capture that in a normal chart. Yeah, that makes sense. I'm not sure that makes sense, but you can in a log chart. So here's the log chart. Yeah. It's just the way, it's just mathematically, it makes more mathematical sense to look at a log chart for the long term compared to a normal chart, because you can just see when you look at the normal chart for the NASDAQ, we go back to 1985 to 1995, you can see it's going in an uptrend. But the NASDAQ went from 125 to 500 in about 10 years. and it can do that in maybe a few months because it's so much higher. So what's that? That's a 300-point rise. It can do that in a day. Yeah, you can do that in a day. Yeah, you can do that in a day nowadays. So on the 15th of April, it fell 300 points. So remember, between 1985 and 1995, it rose 375 points in 10 years, but that was a fourfold increase. And on the 15th of April, it fell by 300 points. So that's why log chart makes sense over the long term. Over the long term. Over the short term, normal chart's okay. Okay. So hopefully that's what you're asking about. Oh, okay. That showbiz with regards to Sigma. What is the likely process of the merger takeover by Chemist Warehouse likely to look like with Sigma Healthcare being so much smaller? Chemist Warehouse is a monster and category killer. What is the likely scenario? Please, Kneppy, assuming takeover proceeds. If the takeover proceeds, Chemist Warehouse would be a quite attractive business. I think this is a potentially high quality business, while Sigma Healthcare is not. This, in my opinion, is a reverse takeover. This is a takeover. Sigma is much smaller. Chemist Warehouse is a much better company, and is a monster and category killer. This is the type of company that you probably want to invest in. The question is the valuation. Now, the market knows that this is the sort of company you'd probably want to invest in because it's, as you said, it's a monster and category killer. And that's why I think the market might be possibly overpaying for it now, even though there is still risk that the market takeover bid doesn't happen. So share price is back up to $1.30, and I did some calculations when the takeover or merger was first announced. This was back in 13th of December, and I still thought, even if it goes through, even based off Chemist Warehouse's numbers, this does look quite expensive. But because it's a high quality company, many participants in the market are willing to take that chance that this takeover doesn't happen. And if this fails for some reason, share price of Sigma Healthcare will fall by, what, say 50%? It could fall nearly 50%. I'll say 40%. That's how much premium is in this company right now on the hope that this takeover does go through. Okay, so thank you. That's showbiz. I would, if this takeover bid does go through, I would consider buying Chemist Warehouse eventually. Okay, Rahul Kalian, can you please have a look at corporate travel, Frontier Digital Ventures? Is it worth looking at Frontier Digital Ventures at its support level of 55 cents? Or is that just wishful thinking as there is no evidence supporting it? Okay, so let's do this part by part. So let's have a look at Frontier Digital Ventures first, which I am a shareholder of. In fact, I'm a shareholder of both of these companies, a small cap company and a larger cap company. So 55 cents. Yeah, it's just hanging around 55 cents. So that was a little support level, and it's just hanging around here. The most recent trading day, it did fall below it. So it's at 54 cents now. So it's right on this level. I wouldn't say this is a break below this support level, but I'd like to see the share price rally and get above the high we saw back on the 3rd of April, which was about 63 cents. I'd like to see 63 cents taken out because that would be a good sign moving forward. The share price is trying to move into an uptrend. I'm willing to give Frontier Digital Ventures a little bit of slack right here because it has hit that inflection point of becoming sustainable for the long term, cash flow positive, that sort of thing, and profitable. That's why the chart looks interesting. That's why the chart looks like it's moving or trying to move into an uptrend. We did see a bit of a wouldn't say a peak in volume, but definitely increase in volume compared to what we saw in November, December, and the start of this year. So things do look more interesting for Frontier Digital Ventures, but just what's been happening the last 2 weeks with the share price under a little bit of stress, and the share price really struggling to stay above 55 cents makes me a little bit wary right now about this company and just the chart. But it is in my small cap portfolio, and I plan to hold this company for long term. And because it's in my small cap portfolio, I'm not looking at the chart all that often, maybe once a week. But just looking at it right now, I don't say it's particularly strong. I just need it to see it rally, and I really want to see some volume coming in as well. So back to the rest of your question. Also bought corporate travel management. I can tell you this chart is not going to look good. After fell due to negative guidance update and two was at its support level, which it bounced off. However, it had a slight bounce and dipped below. Is this a small hiccup or potential bearish momentum building in a high quality company? Also, I've been told to be cautious buying stocks when the market is an all-time high or even just stop buying stocks at all. Is this true or are there holes in this belief? Thank you again for the awesome video. Well, yeah, I'll talk about that little point later. Corporate travel management. This is a fairly bearish chart. Yeah, this is a bearish chart. If I saw this chart without knowing the company, I would say this is bearish and it has broken a support level. But I do know the company's corporate travel management. I do consider this company high quality. They made some quite, at least one astute acquisition a few years ago. And I think those acquisitions have put this company in a favorable position. Now, they did have that negative trading update or the results, and I think that's a little bit of an overreaction from the market. And I'm thinking long-term for this company. I'm thinking 5 years in advance. Now, when it comes to quality companies, and I see the share price fall like this, I don't really care about the chart. The chart is relevant for me. It's a valuation. So I haven't really looked at the valuation of corporate travel management. I should. Price earnings ratio is about 19.71. And I think that's fairly low based off the potential growth of this company moving forward. So that's the first thing I'd say is I think there could be some value with this company right now. Because again, as I mentioned, I don't really care about the chart for these companies. It's about valuation. Can I buy a high quality company at good value? I did this with American companies 2 years ago. I bought quite a few of those companies when the chart looked pretty ugly, and most of those companies are much higher now in terms of their share price. Because I didn't care about the chart, I just care about the valuation, and all those companies became attractive to me. So we're talking about Microsoft, Alphabet, even Apple bought that attractively. Spotify was another one. So quite a few. TSM was another one too. Anyway, and if you just want to have a look at the weekly chart, the next sort of support level for this company is right there at about $14, which was the lows we saw back in, was that June? No, November 2022. So it's a little way off from there, but not that far. So that's how I deal with corporate travel management. I have a long-term holding and I'm not going to sell at all. Not even thinking of selling. And should not buy at all-time highs. I can see why there would be that thinking. I've also heard some people say only buy companies that are reaching all-time highs because there's momentum behind those companies. So you could say when the market is an all-time high, there is an uptrend and you're going to see, or more likely to see, all-time highs continue. So right now, we're well off a long all-time high. So let's have a look at the XJO. We're still in an uptrend. And, okay, so how many times did we see an all-time high? So let's go back. Well, the problem is the all-time high for the XJO was here. Then we didn't see another one for, was it 10 years or so? Yeah, I don't know. It's a weird one. It does come back to also to valuation. If the XJO if the XJO was say 5,000 compared to 8,000, that's much better value. So you much rather buy companies when the share price is much lower than when it's higher. But when you're talking about momentum, if the share price of a company keeps hitting all-time highs, that's actually a good sign. There's good momentum behind that company. And ideally, the best charts are companies whose share price has moved from the bottom left to the top right, which means a company is hitting all-time highs time and time again. And if you can buy those sort of companies, you're not going to regret it. And I think the same can apply to the market if you are aware that eventually You might see a little bit of a dip, but eventually the all-time high will be beaten. That's almost a certainty. Anyway, I have never heard that you should never buy at an all-time high. In a way, I can sort of understand it, but I've heard some weird things in the past which don't make sense. Someone said to me, real investment is buying companies that have a dividend. If you don't buy companies, if you buy companies without a dividend, that's not investing, that's speculation, which is absolutely ridiculous. Anyway, thank you, Rahul. I probably didn't give you any sort of insights there. Okay, any chance of an LTR update on today's quarterly? LTR, is that Liontown? It is Liontown. This is one of the quarterlies that I usually skip because when I open it up, it's not much receipts there, if any at all. Does Liontown Resources, are they in production yet? No. So Liontown Resources is a quarterly update I just completely skip. I don't even look at it because there's no receipts. Quarter results, I'm focused on cash flow. That's all I'm focused on. I don't care about all the activities. And a lot of times they just quote activities they've already released to the market. I saw this in another comment somewhere else where someone asked about a company who had 55% iron ore. And I said, this announcement or this news was actually released 2 months prior. So this is not new news. So a lot of these highlights in the activities report are not new news. They don't provide any new news in the activities report. Not a lot anyway. So I usually focus just on the cash flow report. At this point in time, Liontown, still a story stock. Still a story because it has it has zero generation of cash. And because it has zero receipts, it is cash flow negative, burning through cash, and that means possibly it has to do another cap raising. Who knows? How much cash do they have on hand? $358 million of cash on hand, so maybe not. Maybe they don't have to do acquisition. So anyway, and other than that, I don't know a lot about Liontown. I don't really follow that company too closely because, again, it's a mining company that's not in production, and I don't follow those companies too closely. But thank you for your question, Mitchell Thompson. Adrian says, actually bought into Megaport today. I really like the business, is cash flow positive and strategically moving in the right direction. I'm going to give you a little thing here as well. I actually bought some shares in Megaport as well because I didn't understand the market reaction, previously I've been trading Megaport. This acquisition of Megaport was not a trade; it's for a longer term position because I definitely think Megaport has not turned around, but they've gone past that inflection point, and I think this company can keep on growing, and the growth in this company could be quite phenomenal in the next 5 years. It's also in the right space, the space I'm looking for. So I did buy some shares in Megaport for a longer term trade. Not a trade, a longer term hold. Okay. Big Boy Baby, can you do a standalone video on Big River? I actually did mention Big River, didn't I? It may be a ticker you never heard of. I've heard of the ticker, but I don't know much about the company. Share price has been falling since they are forecasting a rough financial year 24. And I think I mentioned Big River because they did an announcement, and then you mentioned here the trading update. Yeah. So I talked about Big River in one of my videos. It might have been the 30th of April video. I can't quite remember. So have a look at that. But I have promised to do a standalone video on Big River because I should write that down. Because I know nothing about the company, and Big Boy Baby has shared an idea with me. Now, I think one of the reasons why I decided to do that was because it looked possibly attractively valued. I can't quite remember. I took a very quick look, and the chart, the chart looks nasty right now. It's in a downtrend. But I had a look at the price earnings ratio of 8.6 and dividend yield of 8.3, and straight away, when I see that sort of thing, I go, I'm going to have a closer look at this company. I always can be enticed by value. When I first started investing, I was a value investor. I loved looking for value. Loved it. And then I got entranced by story stocks, that sort of thing. And then I have transitioned to doing other things. And now I do prefer high quality company investing over value investing. It's a little subtly different. If I can find a high quality company at good value, that's the best. Anyway, so Big River, and apart from trading, I really like trading as well. So technical analysis. So I will do a standalone video on Big River Industries. So thank you for your comment. Big boy baby. Map, talking about Brainchip, up 45% for you. Hopefully tomorrow Brainchip will tell me when I'm getting my, you've ordered a key to Edgebox. Well, congratulations. I hope that is not included in $90,000. Let's just have a look at Brainchip. So this is, again, definitely a story stock. One of the great story stocks on the ASX. And I was trading this, but I got out. I would have got out almost a year and a half ago when I realized the story. I thought maybe they could finish writing the middle of their book fairly soon, but I just realized they're still in the first chapter, and the first chapter, I think, had a bit more to go. And I still think they're in the first chapter. So this is a really long first chapter when I thought maybe they could be getting to the crux of the story by now, but they're not there yet. And the share price after at least the Qoria results has gone down. 2nd of May, share price fell 12.3%. I'm not sure why. That was after the Qoria result, wasn't it? They released the Qoria result on the 29th of April. Share price on that day fell 3.3%. Look at that. 1, 2, 3, 4, 5, 6, 7 red days in a row. Share price has fallen from 32 cents to 24.5 cents. And the chart looks ugly, but there was that nice run here. But I don't usually pay attention to these sort of runs. I like to see a nice consolidation period and then share price starting to increase on positive financial news. And Brainchip definitely did not have that. And it says here, markup, still 458 million. Oh, yeah. So thank you. Map 0v0. John Channel 449. Can you look at Dimerix? Okay. So I do own Dimerix. And I've traded Dimerix. I sold out of my trading position and I kept my profits. And I'm just going to hold that for as long as possible because this is still a story stock, Dimerix, but it's a much better fleshed out story than Brainchip. In fact, I'd say Dimerix is definitely in the middle of their story, their crux of their story, the body of the story, and they're moving towards, I wouldn't say the end. I'm trying to think when the end of the story is, because technically the end of the story is when the company winds up. So Dimerix is definitely past the first chapter, and they're getting into the body of the story. Now, they're still a little bit of a story stock. They still have a little bit of way to go, but I do like where they're at, particularly when I compare them to, say, Neuron Pharmaceuticals. Different company, completely different company, but there are some similarities there in terms of the deals they have made. That's what attracted me to Dimerix. The other thing that attracted me to Dimerix was the chart. So let's have a look at the chart. And yeah, the chart was brilliant. So there was a breakout on the 5th of October, 2023. I'm pretty sure that's when they announced the deal. I can back that up. 5th of October, 2023. 5th of October, 2023. We have to look at announcements. 1 year. 5th of October, 2023. There is. And Dimerix announces license agreement for EU, Canada, and ANZ. That's what got the market excited. Share price broke out that day. Remember early in the video, or maybe if you skipped early in the video, I said what I like to see when a share price breaks out like this is a share price to go sideways. And that's actually a good sign. Not the share price goes down, share price goes sideways. In fact, for Dimerix, they released that announcement on the 5th of October. You could have bought at the same price on the 13th of December, more than 2 months later. And then the share price started to move into an uptrend. Beautiful uptrend, still an uptrend. In fact, on the last trade day of the week, on the Friday, share price rose 7.5% and is at a long-term high. Maybe not an all-time high, but a long-term high. Last time a share price was this high was back in August 2021. Anyway, so chart looks absolutely brilliant for Dimerix. So just look at the volume after they released that announcement about the deal. much higher volume. So the market is aware of this company. The share price is in a beautiful. This is a beautiful chart. Buy the dip when it comes to Dimerix. But again, it is a story stock. But they have received some revenue through this deal, but not as much as New Ren. But market cap of Dimerix is only 184 million. New Ren, this is what could happen. This is what could happen to Dimerix. It could, maybe not this extreme, but New Ren Pharmaceuticals has a market cap of $2.5 billion. This is where I bought New Ren on the breakout. Positive phase 3 data. Share price on this day rose 91%. People said, "You crazy? Why would you buy when a share price of a company goes up 91%?" I bought at $3. Share price now is $19.70. Anyway, this is not about Neuron Pharmaceuticals. This is about Dimerix. So yes, is that enough about Dimerix? I'm not going to have a look at the anything else but the charts and that sort of thing. Hi Kneppy, love your videos. Can you please do a Frontier Digital update? One other thing about Frontier Digital is they didn't release a quarterly report because I don't think they're doing that anymore. Is that right? Trading update, that's all they released. And when I actually looked at Frontier Digital Ventures earlier, I did not look at this trading update. And I think it's positive. I can't remember looking at this, but I believe it's positive. So revenue up, 19.2 million. So what I'm looking for is EBITDA. There's quarterly EBITDA, 1.5 million. They probably don't talk about profit, but they are talking about quarterly cash flow. Operating cash flow break even for 360 LATAM. Positive operating cash flow in the first quarter for MMG. And FDV Asia, positive operating cash flow, but they haven't got anything in regards to the whole business. Consolidated cash balance of 13.9 million. What was it at the start of the quarter? That's what I'd like to know. Here's revenue for LATAM, EBITDA positive. There wasn't much to dislike from this, but if I remember correctly, it's just that Pakistani. What's the Pakistani one called? Do they even have it in here? Oh, it's in this bit. Associated, yeah. It should be in here somewhere. It's not. Zameen, that's what it is, FDV Asia. I thought they singled it out and Zameen was down a fair bit. Or maybe I'm thinking about an earlier announcement from Frontier Digital Ventures. Anyway, so go back to the start of this video when I did actually talk about Frontier Digital Ventures in terms of their chart. But at this point in time, nothing to complain about that trading update at all around about this company. Okay. NOU thoughts. Noumi used to be Freedom Foods, I believe. I'm pretty sure it used to be Freedom Foods. Yeah, Noumi. They released their Appendix 4C, and to be honest with you, it did pique my interest. There's a reason it piqued my interest is I consider Freedom Foods and now Noumi to be a highly low quality company. Does that make sense? An extreme low quality company until maybe now. So let's have a look at this Appendix 4C and compare it to one of the previous ones. So let's open up one of the previous ones. And this is the why Freedom Foods actually got into trouble. They had really low cash flow. In fact, I believe they had negative cash flow while they were reporting profits. So they were distorting something, or they're distorting, manipulating the profits when they had negative cash flow. And that negative cash flow was year after year. And that's if I remember correctly. And let's go back and have a look at this Appendix 4C, 28th of July 2023. Hopefully this is a good comparison. Okay. Or maybe it's not. No, it is. This is not as extreme as it has been in the past. In fact, this is a good, you can see it in fact the 12 months, this is a year to date. So at the end of financial year 23, Noumi had $562 million of receipts, but was operating cash flow positive by only $4.3 million and free cash flow positive by only $600,000. That was a problem with Freedom Foods. But part of that cost was legal and US litigation costs. Looks like they didn't prove it in the last quarter. So they were free cash flow positive by about $5.3 million. Now, when I had a look at this particular Appendix 4C, a couple of things that stood out. The first thing was how good the cash flow was in this particular quarter. Operating cash flow positive by almost $20 million in a quarter. Now, there could be reasons behind that in terms of working capital changes that were beneficial from the company. So I'd have to have a look at the balance sheet, have a look at trade receivables, inventories, trade payables, and you can't see that in the Appendix 4C unless they actually mention it in the the commentary. And I haven't gone through this at all. So maybe they do mention it. I don't know. But it's just the very fact that they were operating cash flow positive by $20 million in this quarter. Is this company becoming more efficient, economical? Have they turned sort of a corner where they are profitable, but also cash flow positive? I'm talking about free cash flow positive. Cash on hand, 24.6 million. Okay, so I have no idea how big this company is. So let's have a look at market index. Where is it? Market index. Noumi, I would say $100 million. I have no idea, actually. $37 million. Okay. Is that right? In fact, Noumi has the Freedom Foods logo here. Is that right? 37 million. Do they have a fair bit of debt? That's one thing I didn't look at here is debt. So let's have a look at the debt. That would probably be the reason why they have a... Oh, okay. $456 million of debt. Okay. So that's immediately a turn off for me. I don't like companies with that sort of debt. That's a huge amount of debt. It's a massive amount of debt. So I'd be running for the hills right now if I saw that. If they had a true market cap of 37 million and I saw this quarter, I'd be going to the bank and remortgaging my house and buying Freedom Food or Noumi, whatever it's called. So let's have a look at the chart. I'm being stupid when I say that. Now, as soon as I saw market cap of 37 million, I just thought there must be something wrong, and usually it's the debt. Okay, and the chart. So we have to zoom in here. Charts, nothing. Just going sideways, consolidating. Share price no longer in a downtrend, but nothing much happening with Noumi, not much volume coming through. So this is definitely one just to have your watch list. But what are they going to do with that debt? That's the main thing I would have when it comes to this company. Noumi, that Worley chart looks like garbage. Plus, we've all had swing trades down below somewhere. I think I've done $11 to $12. Fundinus. I can't remember looking at a Worley chart. It must have looked horrible. Let's have a look at it again. Oh yeah, that's looking ugly. Now, there is a little bit of an argument, which maybe I made in that video. Look at that. Look at the share price bounced off. People say technical analysis doesn't work. Now, technical analysis does work because it's all about psychology of people. And there was a lows in this company's share price back in February at $14.40. What was a low on the 30th of April? Share price low was $14.46. So right on the lows we saw in February, and share prices bounced off those lows. Psychology, it's all about psychology. So people go, oh, share price of Worley's back down to when I could have bought it in early February. Oh, this is attractive. I'm going to buy some shares in Worley. Anyway, chart does, the longer term chart looks okay, but the chart's starting to look a little bit ugly for Worley. I still can't remember featuring Worley in my videos. Yeah, when you get older, your mind goes. Thanks for the details. Top 10 ASX today. Videos getting much better nowadays. Were my videos awful? Were my videos awful before? That's sad. Well, they should be better through time because as I get more experience, ideally they should become better and better. Thank you, Saji Varghese, for your comment. Oh, Rahul again. I had a look at No's receipts, if they are growing like you said, but they seem to be quite volatile. Is that what you meant? Positive Q1, negative Q2, positive Q3, staff administration costs were too high. What do you think of this company? As it looks promising, but I'm not sure. I haven't had a closer look at Knosys. I'm going to have a look at this company in more detail because of this 1 quarter. And as you might, in fact, what I could do in this video is have a look at the cash receipts history because I still have my spreadsheet up. The quarter is over. And usually at the end of the quarter, I fill in any spaces and I never do it because I'm just quartered out. And because I'm going to miss some companies' reports. So let's have a look at Knosys. Here it is. So we have Acumentus. And just by looking at Knosys, if I can find it here. Oh, this is really slow. I can just see by the numbers that you're probably right, Rahul. There is a lot of volatility or a lot of lumpiness when it comes to this company's receipts. So that, and if I did a video or did a little bit of research on the company, the first thing I always do is what I'm doing right now. The very first thing I do, and if I don't see any consistent growth with time, I usually end the video there. Not always, but I usually do. So let's have, just put in quarter and receipts. This company goes back to October 2015, which is the September quarter. And then, of course, I do a little chart. Then I expand it. And then I go to my favorite chart or layout. That's what they call it. Chart layout. And then I do this. There we go. And yeah, there's a lot of lumpiness when it comes to this company. Lots and lots of lumpiness. But generally, receipts are going up. But you might make the argument, the last 3 years, receipts not going up, going sideways. So thank you, Rao. Just by me looking at this, I can see that, yeah, they might have had a good quarter, but they do have a fair bit of lumpiness, volatility here. And if you take the whole period, the last 9 years, your receipts are going up in time. The last 3 years, I probably don't see a trend there at all. So thank you for that. What do you think of this company? As it looks promising, but I'm not sure. So yeah, I haven't had a closer look at Knosys, but the first thing I always look at and want to see is growth in receipts. And the very fact that receipts aren't growing over the last 3 years does have me a little bit concerned. Can you please also look at Clinuvel? I can definitely look at this one. I have had an eye on it for a while, and now it's dropped to long-term support at $15, and the company is doing a buyback. Is this signs that it's undervalued and maybe time to look into positions? Thanks for the awesome video. Okay, I'm a little bit biased when it comes to Clinuvel because I'm a shareholder of this company, a long-term shareholder, in fact. And I think, just my opinion, now there are risks with this company. They are a one-product company. I like to see the company expand, but they're trying to do that. Yeah, $15. There is a really good support level at $13, and it's bounced off $13. Share price is in an uptrend, or downtrend, I mean. Definite downtrend. You can see it every single time it gets to this longer term moving average channel, it finds weakness. And each high is lower than the preceding high, which is, again, a bad sign. What we don't want to see is a share price fall below $13. Some really good volume coming in from middle of February. I'm not sure why that is. I'm pretty sure the results the market did not take kindly upon their results. Share price fell 12% on that day, so that could be one of the reasons why we have seen increased volume. Now, I think this company will continue to grow. There has been concerns about competition in the past around their, what's it called, SNES, for that awful disease. I'm trying to think of the name. E something. Pigmentation of the skin. And I have not heard anything else about that competition. So that has been one concern. But market of the company, $744 million. P ratio is 25.5. And if you look at actually, let's do this via FinChat. Why not do it via FinChat? I have the capability. So Clinuvel, you'll be able to see the amazing revenue growth of this company. Revenue growth. Total revenues. Yeah, so this is a beautiful revenue growth. Now, you might say the last 12 months is a little bit 81.8 million compared to 2023, which was 78.3 million. So, in fact, if we have a look at the semi-annual or the annual, you can see there's lumpiness here. There is seasonality to this company. And I would expect the second half of this year to be amazing. The reason why there's seasonality behind this is because pigmentation. So people who it's people who have or can't go into the sun because they get blisters and that sort of thing. And so usually these people take the treatment when they're going into the summer. And most people who have this condition are living in the Northern Hemisphere because the majority of people in the world live in the Northern Hemisphere. And they are selling a lot of their products in Europe and America, I think. And so they take this treatment around this time of year where we are right now. And that's why you see this seasonality to the company. And so the company should have a really good half year where we're in right now. Should. But the main thing here is growth. You can see the company's revenue is growth. So the other thing I want to look at now is the PE ratio of the company. So at 25, the PE ratio sounds really low because not only is the revenue growing, the profit's growing. I should have a look at the margins as well, but PE ratio of the company has been dropping. Look at that, consistently dropping over the past 5 years. So back in 2019, PE ratio of this company was 80 to 100. Then it kept on dropping to 60. Then went to 40. Now it's just above 20. So I think this company is attractively valued at this point. In fact, according to FinChat, the PE ratio is dropping at an annual rate of 7.93% per year. Okay, so is there any reason why the market is or does not like this company? I have no idea. I don't have my heart on the pulse of the market. The other thing I could do is just look at income. Let's have a look at income. Net income. It's rising too. Is that income? Yeah, that's income. It's rising. Now, they have spent a little bit more money in the most recent half, which is why it's down. So the margins were slightly down, but there were reasons behind that, which I can't remember right now. It didn't really concern me, but it did concern the market, I think. I think it did. And you can actually see the margins. If we look here, we'll have a look at which one? Pre-tax. They don't have many margins here, pre-tax margins. So it has dropped a little bit. And so I'm a little bit biased when it comes to Clinuvel. I think it's good value now. And I think in terms of valuation, it's probably the most attractively valued this company has been probably forever. And they're doing a share buyback. And that's the right time to do a share buyback when the company is undervalued, a perfect time to do it. So I'm a shareholder of Clinuvel and I have no reason to set out of this company at all. Don't even thinking about it. Okay. Sajid says, for Vection Technologies, just research their top shareholders and management a bit more and why they're sliding down since 2019. Thank you for that insight because I haven't had a look at Vection. And just based off that one call, I want to do a little bit of research on the company. So I'll have a look at their top shareholders and management when I do that video or that research. And I still plan to do a video on the company. But if I find something I don't really like, which is a possibility, I probably won't do that video or I'll delay the video until I get more clarification around the company. Yeah. Please do an update on Qoria, QOR. Thank you, sir. So I know the chart looks absolutely brilliant. There was a takeover bid for the company, and the management said, "Get lost. You are undervaluing this company." And the appendix 4C. I believe there's seasonality with this business as well. So Qoria used to be called Family Zone. And yeah, this company is growing. I mean, there's nothing. If we have a look at this one quarter results, they were slightly free cash flow negative, but only slightly. and they still operating cash flow positive for the year to date. But I believe there's a bit of seasonality here. I could be completely wrong because I am trying to remember. Let's have a look. Did they say anything? I can't remember them seeing it. I can't see anything in regards, and this is me going through it really quickly, but I do think this company is intriguing and interesting. Probably my only concern, not concern, my only hesitation around this company would be, in fact, they might mention something in the quarterly cash flow report here. Cash flow analysis. No, they don't mention anything. My only, and here it is, my only hesitation around this company would be the market cap. So $500 million market cap at the current time. So I think there is an argument that this company is richly valued, but it could be richly valued for a reason. So the only reason I have not taken a position in this company is just the valuation. That's it. Now, just because I don't think it's attractively valued doesn't mean I can't trade it. And that's the only, not the only thing, that's a reason why I could be taking a position, because the share price has taken off because of that failed takeover bid. And they did release a pretty good quarterly as well. And the chart has turned around. Some negative sentiment in the company, chart has turned around, sentiment in the company has turned around. Things are looking good for Qoria. And if you just have a look at the financial data of this company, so if we go back to here, have a look at Qoria, even though this is going to be half-year data. So even though this will be half-year data, hopefully I can find it. Hopefully it comes up quick. We got the income statement. And so even though this is not receipts, it's revenue. And I do look at revenue. So revenue has been growing. That's all you need to know. So the uptrend is good. But the company's not profitable. I believe the company's not profitable. Let's have a look. Net income, no. But if you look at cash flow, has a company been cash flow positive? December it was. December quarter or December half, it was free cash flow positive. So operating cash flow positive as well. So possible turn the corner for Qoria. Am I pronouncing that right? Okay. Older traders warn young folks to avoid using white background for charting. It will FCK your eyes up. White background is a strong beam of light to try to read off. Well, that's interesting, Jack Sand Factor. Okay, so I like looking at white charts. Now, what he's talking about is, I can actually do it right here, and I do it on occasion. Go to dark mode. Here it is, dark mode. And to be honest with you, I sometimes prefer this, the dark mode, sometimes. But when I look at this for maybe a medium amount of time, I always have to go back to the white chart. And I can look at this white chart or this white background for hours and hours without any harm at all. So we're all different, and I just prefer the white. And interesting enough, if you go to, say, Twitter, and I'm probably sure I'm not the only one, because whenever I see charts on Twitter, the vast majority of them are charts. There's all these I do like college football, by the way. So there's a black chart, but you see a lot of white charts. I'm not going to see any, am I? Look, there's a white chart. That's a white chart. White chart. White chart. White chart. So just based off Twitter, the majority of charts are white. And to be honest with you, I prefer, here's another chart from bar chart, white chart. So bar chart always have white charts. I just prefer white charts. That's me. So I think everyone's different. But sometimes I actually do look at the black background. And one of the reasons I do like the black background or dark mode is, funny enough, it's not the chart itself. It's on the side here. I really like the black. Maybe if I could make that black and this white, I'd be in a dream state. But I just don't like the color layouts when it goes to black and the blackness. I don't know. It just does not work for me. So typically I do use white or the light. Again, but we're all different. And I'm not old. I'm very young. So that's probably why I use white. Crystal Crafters, how about looking into Cobra as one of those potential small caps? Its promising growth trajectory could make for an interesting addition to your series. So this is 2 small caps to buy. Would love to see it featured in one of your videos. So is that CBO or COB? No, it can't be CBO because that's Cobram. Is Cobram COB? CBA, there we go. Okay. I like to feature any companies in that series that have revenue and possibly are profitable. Doesn't have to be profitable, but I want real companies. So is Cobra a real company? When I mean real, I mean they're selling something, not a story. They're selling a physical product, services, or something. Is this a real company? I don't even know what they do. I'm assuming they're a mining exploring company. They actually talk about BHP here, so that's the interesting relationship. Selected to participate in the BHP Explore 2024 program. What is that? Is that where BHP gives this company funding? I can understand why, because they're in copper. And I know BHP really want to get into copper. So Cobra will be in the right space. So copper, Botswana. So it looks like there are a lot of mines or projects in Botswana. And I'm assuming they're not in production. Let's have a look. You're not in production at the moment. Just let's have a look at the chart. I would assume the chart might be looking okay because of copper prices. If it's not, starting to turn. A lot of times you'll see the exploring companies run much later than the producing companies, and possibly Cobra will go into run if copper prices keep on going up. Market cap is 23 million. Okay, so thanks for your suggestion, but maybe I could do another series where I look at mining exploring companies. Something to think of. Adrian says, any insights into the Helloworld trading update today? Would be great. I sort of did talk about it in my video yesterday, and I'll just have a look at this. I didn't see anything overly negative, although I did not have a close look at it, but the market didn't like it, and this is the chart. So was it yesterday? The day before, I think I did Helloworld, and the chart looks pretty negative. No reason to get excited about Helloworld just now, just based off the chart. And the market didn't like the trading update. So that's all I'm going to discuss when it comes to Helloworld. I have no significant insights when it comes to the particular trading update. I have to have a closer look. And sometimes when I have a closer look, it means I don't talk for a while. So that would not work for a video where I'm just looking at an update for like 5 minutes and not talking. Where do you look up results for American companies like Amazon? Actually, this is a pretty good question. Where do I look up? Where do I look up? Okay. One thing I hate about the American market is, unlike ComSec platform, and I haven't found any platform like this in America. So on the even the ASX announcement page is really good because you have all the announcements of all the companies listed. But ComSec is great. You can see all the announcements and filter of all the companies on the ASX each and every day. There is no platform I can find in America, so you have to know what to look for. So for instance, earnings calendar is great, but that's just earnings. But I suppose you did ask, where do you look up results for American companies? So what I do is earnings. Where is it? Where is it? Earnings calendar. You could find other earnings. There's probably many earnings calendars out there, but I do like this one. In fact, TradingView has an earnings calendar somewhere. I wonder if I can find it here. Where would it be? We'll have to probably go to the homepage. Let's leave it. the chart, search earnings calendar, and the reason why Training View might be a little bit better is because you can automatically bring up the chart. Or maybe it's not going to come up in here. I'm just going to Google it, Trading View. Oh, here we go. So we have NASDAQ, which was the first thing that came up. I've got to spell on calendar right. I spelled it wrong, did I? Calendar. No, I spelled it right. Let's do it on about. And hopefully there's a Trading View there somewhere. Here it is. This is only US companies, which is all we want. So here it is. So this is per day. And yeah, this is really good because then you can open up. So for today, a company called Equix, market cap of 66 billion. Never heard of this company. Release their results. You can open up the company, look at the chart. Right? So you can do that. But what about the results? Where do you find the results? So this is only they report earnings per share estimate, reported earnings per share, surprise percentage change, revenue forecast, revenue actual, date, and period ending. What I will do sometimes is if you go to NASDAQ, if you go to today's date, what's today's date? It's, oh, don't. Oh, it's the wrong day. Where's Equinix? Is that the right day? I was on here. Today, tomorrow. Hershey Company released their results. I remember Hershey Company released their results, so we're on the right day, but for some reason, in earnings calendar, oh, there's Hershey, yeah. So for some reason, Berkshire Hathaway is not showing up in Trading View, which is weird, in my opinion. Is this by, yeah, this is this by market cap. But Equix is, so they've got different companies here, which is weird in itself. But if you open up, say, Hershey Company, let's have a look at Hershey Company. So they've got a time here. So some companies release their report before trading begins, some after. I don't know what this minus sign is. So Hershey released their results before trading or during trading. So what you can do is open up their page, and they've got press releases here. Press releases, and that's all good. What you can also do is go to, say, where's FinChat? FinChat, put Hershey. I wonder if their results are in here yet. So they have investor relations here. So they have all the reports. So they have the report here, the first quarter. So nice little report, and the transcript. So I'm starting to use this more and more because it's really nicely laid out, and they've got months or years and years of information here and all the announcements. So investor relations in FinChat. So have a look at that. But I really like having a look at the earnings calendar just to see when they do report. That's the first most important thing, when they report. So I will go through the NASDAQ one each and every day, just looking at which companies report. And other than that, I have no idea how you get all the other announcements. So on Monday, we have a few companies reporting, including Palantir and Vertex Pharmaceuticals. So we should be seeing less and less companies, or lower, fewer and fewer companies report. Tyson Foods, Lowe's Corporation. Still some big companies here reporting. Coca-Cola. That's not the right Coca-Cola. It's bigger than that. And the next Tuesday, who do we have? Walt Disney's reporting next Tuesday. BP, UBS, Ferrari's reporting with a great ticker code. Their symbol is RACE, R-A-C-E. And I really like this. And Datadog reporting, and Coupang. Electronic Arts is reporting. So many companies you've heard of. Anyway, so that's what I do. And then if I need to see the report or transcript, I will go to FinChat. Or sometimes what I do is just Google the company. Hershey Company, let's do that. I used to do this all the time, but that's before I found FinChat. So Google Hershey Company, but put investor here. Investor relations, and they have a website. a web page just with investor relations, and they should have all the announcements released here. Even you can listen to the replay of their announcements, press releases, but nothing like we have on the ASX. And I am so glad that we have ComSec and we can see all the announcements released on the day for all companies. All right, so thank you. Nice. Hustle Finance says, this is the most underrated ASX channel. I think you have to be rated first to be underrated. I'm not sure my channel is rated. But thank you. Animal Spirit, can you review SPZ? Is that smart parking? Please, during your next Q&A, looks like it's got some momentum. So I'm assuming you're talking about the chart in terms of momentum, or though you could be talking about the business in terms of momentum. I've got to go back to the chart here. So let's have a look at the chart. And if you mean the business, just leave me another comment. Smart parking. Okay, so there is a few disruptors when it comes to smart parking. If Elon Musk is right, no one will be needing to park anymore because our cars will drop us off when we need to go and they'll keep on driving around or they'll go home. And who knows, maybe someone will create a teleportation device and no more cars are needed. And then Elon Musk and Tesla will become obsolete. So I suppose in the long term, there are some disruptors when it comes to smart parking. But looking at this chart, it looks like a nice chart. This does look like a nice chart. Why am I speaking in accents? Pretty bad accents. And the share price is at an all-time high. Maybe not. Let's have a look at the weekly chart. Oh, not quite. Oh, look at that. Share price of this company got to a high level back in 2018. And now it's close to that highs. But the chart looks really good. The only thing I'd like to see is higher volume, but beautiful uptrend for smart parking. Market cap is 167 million. Is this company profitable? Based off TradingView with a PE ratio of 24.7, it's profitable. Increasing revenue year on year. Well, the last 4 years it's been increasing. 45 million of revenue, income of 6.4 million. Nice increase. Yeah, so the business has momentum. The chart has momentum as well. Share price has been in an uptrend since the middle of 2022. Chart looks good. There's no reason to be, not liking smart parking right now when it comes to the business. And this is me having a very close look and the chart. Great analysis on Console and Dynamic Group. How about exploring Cobre next? Seems like it's gaining traction in the small market. Would you love to hear I think this is the same person who released, yes. Okay, Chris and Caroline, what's your thoughts on Audinate chart? Oh, I have a lot more comments to go. This is not going to be an hour-long video. It's already... Oh, crap. We're like an hour and a half. Oh, geez. Let's go back. Audinate. Let's have a look at Audinate. What's Audinate? AD8. All right, so I own Audinate. I have some lines here, which the lines here are support levels or resistance levels. It's bounced off $18 pretty nicely, in fact, and a really nice day on Friday. Share price up 5.5%. Exactly what I want to see. However, this is the first time I looked at Audinate's chart for a while. Why was that a support level? Look what happened back in January. Share price got to $18, then pulled back all the way down to $15. And then the share price took off on the 12th of February when they released the results. Share price on that day rose 21%. And then share price kept on going. There is a reason why the share price on that day opened and the low of the share price was a very similar price to that old high. So that is actually a pretty significant support level, $18. And we've seen the share price of this company bounce off $18 twice over a short period of time. So it's support. So what was this question asking? I forget already. I'm running it if it will fill the gap below $18. Gaps don't always fill, and Audinate, we saw that with Audinate just here. This gap here did not fill. So gaps don't always fill, And I believe that support and resistance levels are more important than gaps. That's my opinion. It might be a little bit controversial, but gaps don't always fill. And we have proof right here. Here's a gap, a pretty big gap back in August of 2023 that has not been filled. So if you're waiting for this gap to be filled, and we're talking about share price getting down to $10, I think you might be waiting for a long, long time, if maybe never. Anyway, so Audinate looks good. I like the chart. I would say Audinate is highly expensive right now, and there is a reason why that is so. It's a wonderful company with a massive moat. Amazing Night Slide says, amazing that Woolworths owned Big W, a value-orientated retailer, continues to struggle while Kmart goes from strength to strength in a favorable environment. Says a lot about the quality at Big W. Never actually thought about that. Yeah, if I had a choice, I would always go into Big W over Kmart. I don't know why. Yeah, I don't know why. I have no reason, no logical reason. Okay, Nathan Rush says, would you consider doing a video on the indicators you use, how to use them, and why you use them? Leave me another message, Nathan. What do you mean indicators? Are you talking about technical indicators? Is that what you're talking about? So leave me another message, and I can do a video on that. Indicators that I use. Might take a while for me to do a video, but just leave me a comment in this video. You're talking about trading indicators or indicators, how to find a quality company, that sort of thing. Jacksu says, I'm actually a Pentanet shareholder. Would be interested to hear what your thoughts at the announcement and their Q4. I think Pentanet, I'm not going to have a look at their investor update. I think Pentanet is on the cusp. On the cusp. The other company that is on the cusp is Swoop, but I've taken a small position in Swoop because I think that company is on the cusp of breaking out in terms of the business and the chart. And I think Pentanet is at that point as well. Now, let's have a look at their quarterly report. We'll have a quick look at their quarterly report, not at their investor, what do you call it? The investor update. Let's have a look at their Appendix 4C. Why do I think they're on the cusp? So receipts aren't growing at a fairly quick rate. They're just going up very slow, which is okay. My net phone, back about 10 years ago, or maybe even more than 10 years ago, their receipts were growing at a very consistent, slow rate. And you should look at the chart for that company. I don't think they're listed on the ASX anymore. They changed the name to something. And I think they were bought out. But anyway, that company's valuation just went bonkers as soon as they became free cash flow positive, or around that time. I still remember that. And the thing I remember was just their receipts going up very slowly. It was sometimes like $100,000, like from 5.4 million to 5.5 million to 5.5 million to 5.6 million. But the very fact that they went operating cash flow positive, free cash flow positive, the market found out about it, share price went in a beautiful uptrend. It was a turning point for the company. I'm not sure about the timing. Maybe the share price started to take off just before they went operating cash flow positive. I can't quite remember because it's many, many years ago. But Pentanet is on that cusp. And even though, the receipts aren't growing quickly, it's okay because operating cash flow positive says $19,000 here, but they did receive $33,000 in government grants and tax incentives. So they were operating cash flow negative by a small amount. Now, the other thing I like to take into account here is property, plant, and equipment. So they're not free cash flow positive. They're still burning through cash. I like to see this company get to free cash flow positive, and possibly the market is waiting for that point too. And maybe the share price will be higher at that point when they do achieve becoming free cash flow positive, but I'm willing to wait. Anyway, so they're still growing. And I think this company's attractive because when you look at the cash receipts growth, it's a slow burn, and I like that. Thanks for the video to you. I was going to ignore those comments, wasn't I? And the last comment for the day, Nero Black. 1 hour ago, you just got in time. Thank you that you enjoy my channel. You recently discussed NIC and potential breakout. I have shares in the company and will value your updated sentiments. I had a look at NIC, which is Nickel Industries, I believe. I could be mistaken. And I remember it because I went, this chart looks really good. This chart looks really good. This chart is a beautiful chart, particularly in the short term, not the long term, because the share price was in a downtrend. And the share price broke out, probably not break out on positive financial news, broke out on the 4th of April, not that long ago, or 1 month ago, and about 85 cents. The share price now 95 cents. This is a beautiful looking chart. But again, Nickel Industries, I'm assuming this is a nickel producer. Markup is $4.1 billion, so I'm pretty sure it is. If you look at the revenue, nice growth in revenue and income flat. This company will be, in the share price, will be highly correlated to nickel prices. And funny enough, I have nickel right here. Let's have a look at nickel. You don't see, it's hard to see here, so I have to look at a line chart. And look at nickel. Is there a correlation between this chart and, in fact, let's go back to nickel, or NIC, or Nickel Industries, and let's overlay nickel 1. Let's overlay nickel. What is it? Nickel 1. Futures. Which one is it? Oh, no. Nickel future. Nickel 1. Is that it? Oh, it is. There it is. It's a line chart. There we go. Oh, wait there. We've got both of them here. I don't need both. How did that happen? Oh, wait. No. Oh, what am I doing? What am I doing here? I've got to go to candles. And then what I want to do is add nickel 1 with a line. And there is an obvious correlation here. It's pretty obvious there's a correlation between Nickel Industries and nickel. So with a company like Nickel Industries, you have to be following the underlying commodity. You can't buy nickel or industries and I think with just ignoring the nickel price. And nickel prices look pretty good right now, in nice uptrend, and that's, you can see that by looking at Nickel Industries. So sort of in a way, I'm contradicting myself here, because Nickel Industries chart correlates fairly well to nickel. Maybe you don't have to look at the underlying commodity price. Yeah, maybe you don't, because they're fairly highly correlated. So yeah, Nickel Industries looks pretty good, and nickel prices look pretty good as well. So that's why Nickel Industries looks good. Anyway, that's all I have for this video. Longer than I expected, much longer. Was trying to keep this video under 1 hour, and it went about 1 hour and 30 minutes again. Anyway, so if you have any questions, any comments, anything to say, leave it in the comment section of this video. If you don't like anything I've said, if you thought my answer to your questions was unsatisfactory, tell me about it. Anyway, that's all I have for this video. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.